Hello, this is my database research project. Uh, I'm a supply chain major, so I figured I would pick two companies that specialize in supply chain and logistics, those being FedEx and UPS. So a little history about both companies, and just general info. They're both global logistics companies and they provide package delivery, freight transportation, and supply chain solutions for businesses and consumers worldwide. For FedEx, their full official name is FTX Corporation. They were founded in Little Rock, Arkansas in 1971, and they're headquartered in Memphis, where they have their biggest hub of activity, I guess you could say. Services, they provide business services, express delivery, freight transportation, and logistics services. For UPS, officially United Parcel Service, and they were founded in Seattle in 1907. They're headquartered in Sandy Springs, Georgia, which is a suburb of Atlanta. And then the services they offer: courier express services, freight forwarding services, and logistics services as well. Some more info. Both companies have about 500,000 employees. For FedEx, their stock price is 260, and for UPS, their stock price is 90. About the fleet, FedEx has almost 700 airplanes. UPS has a little over 500. FedEx has over 200,000 trucks and vans. UPS has over 100,000. And then both have over or around 5,000 facilities. For UPS, that includes UPS stores. So, like the little package stores that you could go return Amazon packages at. Major hubs. FedEx operates out of Memphis, where they're headquartered. Indianapolis, Anchorage. Anchorage is interesting because it's like a layover for uh, planes coming from Asia. And then Miami. UPS, they operate out of Louisville, Chicago, and Dallas Fort Worth. And then for income statement, balance sheet, and statement of cash flows, I got all of this info directly from both companies' websites. I just went to their website and took a screenshot of info. For the FedEx income statement, up at the top, you can see total revenue $88 million and a cost of 69 million. So they're only left with 19 million gross profit, and then have all these other expenditures. FedEx balance sheet have 87 million in assets and 60 million in liabilities. For cash flows, not a lot of cash coming in. Um, for UPS income statement, it's in millions of dollars, so it's not 21,000, it's 21 million. Honestly, huge company. Um, UPS balance sheet, it's a little small, but get the idea. Sorry, cash flows about the same. Not a lot of cash flow coming in, just a lot of assets. For the ratios, um, I selected gross profit margin, net profit margin, return on asset, and return on equity. Gross profit margin, FedEx is way ahead. Um, for net profit, UPS takes ahead, which means they just end with more money. Return on assets, UPS again wins. They have less assets with about the same amount of net income. And then return on equity, UPS blows FedEx out of the water. Uh, yeah. So profitability shows how efficiently each company turns revenue into profit. Like I said, FedEx has a higher gross profit margin than UPS, which means FedEx keeps more money. But then UPS posts a stronger net margin, which means it converts more of its sales into profit. Basically, UPS uses its assets and equity more efficiently than FedEx does. Leverage and risk, debt to equity, and interest coverage. Debt to equity is just how much money they owe compared to how much equities in the company, and then interest coverage, just how easily they can pay off their debts. For both of these, FedEx is winning. So FedEx, debt to equity, they're less risky, so they just take less financial risks. They owe less money than they're worth. And then interest coverage, they're also able to more easily pay off their debts than UPS would. Leverage ratios measure how much debt each company uses and how risky their structure is. FedEx's lower debt to equity ratio than UPS, meaning FedEx relies less on loans and borrowed money. FedEx is less financially risky. UPS uses debt aggressively to enhance returns, which is good for a privately or publicly traded company. And then for efficiency ratios, I picked asset turnover and earnings per share. UPS wins asset turnover. They bring in more revenue compared to the amount of assets they have. And then earnings per share. FedEx, their stock price is a lot higher. Um, well, their stock price is a lot higher because they have less shares available. So that also really hikes up their EPS. Um, yeah, again, evaluate how well each company uses assets to generate revenue. UPS has a high asset turnover ratio, generates more sales per dollar invested in assets. UPS has a higher efficiency and it contributes to its ROA, which is a few slides back. And it gets more revenue and profit out of a smaller amount of assets. And in summary, both UPS and FedEx have different strengths. So FedEx, they have better gross margins, earnings per share, and financial risk. They're not. They don't have more. They have less financial risk, which is better. But overall, UPS generates more profit per dollar of assets. So it just uses its assets. It uses its assets better. But overall, FedEx is more profitable per dollar of revenue, and UPS is more efficient and brings in better returns. How do I stop?